UBIT, UDFI, your IRA, and real estate. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Adam Talks. Today's episode, I'm going to give you the easy law school edition of how the UBIT rules work, what's the difference between UBIT and UDFI, and how does it apply to real estate transactions involving an IRA. So I get this question a lot. It's probably one of the most frequent questions I get from clients who want to use their IRA to invest in real estate and use leverage. Okay, what's leverage? It's a loan. And one of the questions I get is, I don't understand, Adam, why is there this tax called UBIT, unrelated business income tax? It makes no sense. I get why it applies to maybe a charity that does something that's unrelated to its exempt purpose, but why an IRA? An IRA doesn't have an exempt purpose. Its only purpose is to grow, right, for its beneficiary, its owner. Why are we dealing with this rule? Makes no sense, and it turns a very efficient investment in an IRA like real estate and could potentially impose a tax, the UBIT tax, which follows the trust tax rates in 2024 at 37%, the maximum tax rate. And that number is triggered at a very low income threshold, around $15,000 or so of income allocated to the IRA. So what I want to do is going to give you the 5-minute law school edition here. This is what they do in law school. I'm actually going to explain to you through the tax code, right? I'm not going to just talk. I'm going to explain to you through the tax code. So if you are listening to this podcast, you can check it out on YouTube. And I'm going to share my screen and show section 512 and 514. This is the actual Internal Revenue Code. And the language itself will explain how this rule works. So let's start at 512 because this section defines what unrelated business taxable income is. So if you look at the first section right here, I'm going to highlight it. It says the term unrelated business taxable income means the gross income derived by any organization from unrelated trade or business. Okay, so if you look at unrelated trade or business, you click on it, it has a definition, which is essentially any trade or business that conduct of which is not substantially related to its exempt purpose. Okay, makes sense. So you look at the factors. You need a organization that's subject to UBIT, which is a 501(a) trust, like a charity, like an IRA or 401(k), and you also need something called unrelated business taxable income. Okay, so you say, okay, I'm an IRA. Why is leverage deemed unrelated business taxable income? Where does it say that? I'm looking at the tax code. Where does it say it? Well, the tax code unfortunately does say it. So if you go down to modifications to B, so 512B, which modifies A, and it says, okay, good. Dividends, interest, securities, loans, all good. Those are not deemed UBIT, okay? Also rental income, royalties, capital gains, right? All this stuff that is passive types of income. This is the section that shows that those passive forms of income are not subject to UBIT. Unfortunately, subsection 4 is the killer, because this says, notwithstanding everything I just mentioned about rental income, royalties, capital gains, and interest, in the case of debt finance property, which we'll get to section 514, there shall be included as item of gross income derived from an unrelated trade or business. Okay, so basically what this section is saying is anytime you use debt finance property and you generate debt finance income attributable to the property, even if that income is rental income or passive income, interest, capital gains, it's subject to the UDFI rules, which is the UBIT tax. So this is 512B4 is the killer section, because this basically says anytime your investment uses leverage, whether it's to buy real estate or to buy stocks, it's going to trigger UDFI. And if you look at UDFI, I'm going to share my screen now and show UDFI. Section 514, UDFI, unrelated debt finance income. All it means is if you have unrelated debt finance income, you trigger the unrelated business taxable income rules and therefore trigger section 512 and thus the 37% maximum tax rate. A couple things to note. If you have no income, there's no UBIT tax, right? So you can have a UBIT situation where you use, let's say, 80% leverage to buy a property, and the property generates a lot of depreciation, a lot of deductions, and no income. There's no UBIT tax, even though technically it could appear at some point in the future, and it is an investment that could trigger UBIT. You need at least $1,000 in net income allocated to the IRA to trigger the UBIT and thus have to file an IRS Form 990-T, file up April 15th, and subject to the UBIT tax. Now, losses could be used in future years to offset future income, which is also a positive. But UDFI just means if you use unrelated debt finance income, meaning you are using an IRA or 401k to invest in basically any property, right? Because Section 512 basically says anytime you use leverage, it's deemed an unrelated business taxable income. It's deemed a unrelated business activity. Okay, it's automatically a default. Anytime leverage is used, you trigger UBIT. Okay, the one exception is 514B9, which does not apply to IRAs, unfortunately, but applies in fractional interest to 401ks, pension plans, 401A trusts, which are deemed profit sharing plans, as well as pension plans. And they get an exception where they can use leverage to buy real estate. And the reason in the legislative history, they just wanted 401ks and pension plans to have greater investment choices. So this is B9, and it says here, as I mentioned, covered by a qualified org. And if you look what a qualified organization is, you'll see it talks about a 401A trust, and that's how you get out of the definition of a of having UDFI triggered by using an IRA, right? So any trust would constitute a qualified trust under Section 401. So by getting the 401A, and an IRA, unfortunately, is not a 401A trust. A 401A trust isn't a profit sharing plan or a pension plan. So that's how 401k gets the UDFI exemption, and unfortunately, an IRA doesn't. So in a nutshell, what I've tried to do here, kind of going back to law school, this is what they do in law school. They basically go through the code, and you have evidence and proof why the tax applies. You shouldn't just trust me, right? I'm giving you evidence, right? And that's what a lot of people don't do. They just go online, they go to Google or ChatGPT, and they just ask the question and they take the answer for granted as it's fact. But you shouldn't. It's why you need to work with tax professionals, someone who understands the tax code that actually can get you the answer. And this is the answer. The answer is anytime an IRA uses leverage, whether it's buying real estate, whether it's buying stock, it automatically is deemed an unrelated trade or business. The leverage always has to be non-recourse. That's under 4975C1. But whether you're investing in a real estate fund, whether you're investing in a home with leverage, whether you're investing in a investment fund, a private equity fund, hedge fund, venture capital fund, anytime leverage is used, there is going to be UBIT if there's an IRA. Now, under 514C9, the fractional interest rule applies to 401A trusts, 401k plans, profit sharing plans, and get you out of the UBIT rules. You can minimize it. There are ways to minimize it. I'm going to do a whole podcast maybe next week on how to minimize UBIT. I've done lots of blogs and videos, but I keep getting lots of questions about UBIT, and I wanted to just do specific podcasts about it. So trying to keep it as short as possible. I wish I could do this in 3 minutes, but sometimes it takes a little longer. I'm trying to keep it under 7 or 8 minutes. But basically, UBIT and UDFI. UDFI triggers UBIT anytime you use leverage in any context with an IRA to buy real estate, non-recourse loan, or buy stocks or any assets. UBIT could be triggered if there's more than $1,000 in net income. There's ways to limit it, like a C Corp blocker, structuring your transaction as debt versus equity, investing in a REIT, and obviously using losses from prior years to offset future income is a nice way to minimize it, but it won't generally eliminate it. So that's it. Hopefully now Professor Adam now explained to you exactly UBIT, UDFI. I showed you the tax code 512, 514, how it all works. And now you have proof and evidence. When someone says, hey, how does this UBIT work? You sure it applies. I just showed you 512B4, 514C9 is the exemption for 401k, straight from the tax code. Because a lot of people say, Adam, how do I know you're telling me the truth? Like, I don't understand. Show it to me. And that's what I'm doing, showing you the tax code. And that's what I love doing. That's why I became a tax lawyer, because the tax code makes sense. It's like solving a puzzle. The beauty of tax law, there's certainly case law and there's IRS rulings and regulations. But the tax code and the tax regulations, they're in there. And generally that's the law. Yeah, cases have, they add a lot of layers to it, and there's different types of analysis on the actual language in the code. But for the most part, the tax code is the Bible, which just makes my life easier. And it's something I enjoy working with. So hopefully you guys now understand it, aren't so intimidated. It's easy. You can just Google it. Or you can use IRA Financial. That's what separates us. I think we have the knowledge, the expertise. I've written 9 books on self-directed retirement accounts. It's what I do every day when I'm waking up, when I'm falling asleep. When I'm working, I'm always thinking about ways to minimize UBIT, to come up with strategies to maximize returns in a retirement account, whether you're investing in real estate or private equity, cryptos, gold, private placement, doesn't matter. There's always great solutions. And I think we're at the top of the list in terms of coming up with them for our clients. So thank you for listening. If you're watching on YouTube, appreciate it. If you can give it a 5-star review, that always helps these podcasts. It just gets rated better, more people see it. And you can find it on Spotify, Apple, or wherever you find your podcast. So thanks again for hanging out. Have a great day. I'll see everyone again next week. Thanks.